Alright guys, welcome to Peeps Dojo. I want to talk about something very interesting, and that is simply market structure. Market structure. It doesn't matter what strategy you use, you will always need market structure to be able to read the markets, right? To be able to read the markets accurately, know the direction of the markets, the major trend of the week, of the day, to be able to take your trades in the direction of the market. You've often heard your mentors say this, that always take trades, in the direction of the market, this and that and that. But oftentimes you are not even able to read the markets for beginners, right? So this lesson will also transcend to even the intermediate level, but it's also beginner friendly, right? So what is market structure? What is market structure? Market structure is simply, the behavioral pattern of the market, the highs and lows the market makes in the direction it wants to go, right? So first thing I would like us to talk about is higher highs, higher lows, lower highs, and lower lows. Now, simply, what does higher highs, higher lows means, and what does it look like on the market? So, if you let's have this like this. All right. So this is an uptrend, right? As you can see, this is an uptrend. There are two major types of trend in the market. We have the uptrend, and we have the downtrend. Then we also have the consolidation phase, which can also be called, a ranging market. So these are the three major trends. These are the three major ways the market will usually behave. So this first example is an uptrend, right? It's an uptrend. Yes. And in an uptrend, you'll have higher highs, higher lows, higher highs, higher lows, higher highs. So this is what it simply means, having higher highs. You can denote that with H, and here higher lows, here your higher highs, and here your higher lows. It goes on and on and on and on. Alright, so lower highs and lower lows, right? It usually happens in a downtrend market. Let's quickly go over that. Downtrend market. So you have something like this. Yeah, it will always look like this. So this is a downtrend market. That means the market is generally headed towards the downside. So you see things like a lower low, lower high, lower low, lower high, lower low, lower high. It simply tells you that the trend of the market at that moment, or on that pair, on that chart you're looking at, is simply a downtrend. Let's just quickly label this. You have your lower high, you have your lower low, you have your lower high, you have your lower low, you have your lower high, so on and so forth. That's how the ranging market, the downtrend market is. And what about the ranging market? It simply means the market is indecisive at that time. It is neither going up nor coming down. It is simply ranging. ICT will call it consolidation. The market is in a consolidation phase, and what is happening at that time is simply the market is building up orders, right? Orders from buyers and sellers, right? Trying to know where the most liquidity is to run. in the direction of the liquidity. Now, if you stick with me on this channel, I'll talk about supply and demand. I'll talk about liquidities, the kinds of liquidities that we have, everything that you simply need to know how to also come to the charts and be able to at least read something for yourself and understand what the market is saying. I will go over everything right on this channel. So please, you can subscribe now to get notifications when these videos will be dropping. So right, hit the subscribe button, and tell your friends about the channel. Yeah, so you have a lower high, lower low, lower high, lower low, lower high, then your lower low, so on and so forth. Now, how does the ranging market looks? You see things like this, almost like an accumulation. It is neither making a lower high, neither making a lower low. Rather, it is just consolidating. It's just consolidating. Right? You can see this. So this is what we call a ranging market. The market is indecisive. Ranging or range. Let me just put a range. Alright, so and that's that with the three kinds of trends and higher highs and higher lows. Now, when you talk about break of structures simply means a break of either an higher high to make another higher high, or a break of either a lower low to make another lower low. And what do I mean by this? It is simply the market was first here, it made a higher high right here in this uptrend, made a higher low, then made another higher high. In the process of making another higher high, right, in the direction of the trend, the market was broke the previous higher high, thereby leaving us with what? A break of structure. Leaving us with a break of structure. You can label that BOS, right? The break of structure. Break of structure. It also made a break of structure here by breaking the newly made high. Before it did that, it came back, right? Then pushed up. The market coming back is usually called a pullback, right? This is a downtrend, right? The market is displacing downwards, but before it does that, it usually pulls back, and that pullback is called a pullback. You can call it a retracement, a correction, whatever you want to call it. Basically, it's just the understanding of what it means that matters. All those are English. So there's a pullback, then a break of structure. There's a pullback, then a break of structure. As you can see, we also have another break of structure right here. So a break of structure often indicates a continuation in the direction of the trend. Just as for this down market as well, we have a break of structure to the downside, indicating a further continuation of downtrend. We have a break of structure to the downside, indicating a further continuation of the downtrend. So that is simply all about break of structures. Then the third concept I want us to talk about is the market structure shift or the change of character. So what does this mean? It means the market, making a break of structure before, fails to make another break of structure. Then in this case, the pullback often tends, let's use an uptrend for an example. After the market has made a break of structure to the up, when the market is ready to make a change of character, instead of pulling back into the demand level, making another break of structure, the market fails to do that, and rather the market breaks the higher low, the last higher low. Can you see it? So right here, this here is a market structure shift or a change of character. A market structure shift or a change of character. You can label it MSS. Right? When the market fails to make an higher high in the uptrend and instead makes a new low by breaking the higher low, right? That is called the market structure shift. And on the downtrend, instead of the market to come back into the supply level and make another lower low, the market fails to to do that and instead breaks the last lower high. Now, when the market does this, this is what a market structure shift or a change of character, right? Market structure shift is an ICT term. Change of character is mostly used by the SMC people, but it basically means the same thing. So, and what does this mean? It's an early indication of a potential reversal, right? It's an early indication of a potential reversal. I'll talk more about this in my further videos. Just make sure you are glued to the channel. You're glued to the channel. So that is all about market structure shifts and change of character. Then we have external structures and internal structures. Now, looking at this, let's, for example, this uptrend is, you're looking at this market trending like this in a higher time frame. So when you're looking at it in a higher time frame and the market makes a higher high right here and pulls back to a demand level on a higher time frame, on the lower time frame, this pullback right here, these movements, there are usually a whole lot of noise on the lower time frame. What I mean is there are other mini structures. Let's quickly give an example. Let's say this is the higher high, then the higher low, then an higher high, right? In this pullback right here, before the market make this higher high, if you switch to your lower time frame, you see things like, right? I'm coming. You see things like this. You see the market makes stuff like this. Right, usually does something like this before it gets to, you know, the demand level, and then makes a pull into the direction of the trend. So on the lower time frame, let's label this a lower time frame. That's LTF. That's on your lower times, with like your 5 minutes, your 3 minutes, your 2 minutes, your 1 minute, right? LTF, lower time frame. So this is usually, this higher high is usually on the higher time frame, and then you can, this is simply the external range, right? The external range or the external structure, right? Let's call it the external structure. So you have something like this, external structure, right? And these ones right here, they are usually the internal structure. Let me label that the internal structure. The internal, I placed the arrow there so you can see the internal structure. All right, so that's that on external structure and internal structure. So a major swing on the higher time frame could mean multiple break of structures, multiple market structure shifts on lower time frames, right? So that is why when you are trying to check the charts for information, once you make a top-down analysis. I'll talk about this as well on this channel. Make sure you subscribe, make sure you are glued. So I'll talk about the importance of top-down analysis, why it's important to come from the higher time frame, see what the higher time frame is saying, then go to your lower time frame to get your trend idea, your trade idea, and whatever you want to see on the market. So let's quickly make a recap of what we've talked about. There are three major phases of the market. We have the uptrend, the downtrend, and the ranging market. The uptrend is when the market is simply making higher highs and higher lows, higher highs and higher lows, higher highs, right? The downtrend is when the market is making lower lows, lower highs, lower lows, lower highs, lower lows. Then a break of structure is when the market breaks in a uptrend, when the market breaks a previous higher high to make another higher high. That is a break of structure. On the downtrend, when the market breaks a lower low to make a lower low, and breaks another lower low to make another lower low, it is simply a break of structure. And what does this imply? It implies that the market is willing to continue in the direction, which it has already. Then a market structure shift or change of character is when the market fails to make another break of structure, but rather breaking the previous higher low in a uptrend, just as this. And in a downtrend, when it fails to make another break of structure to the downside and breaks a lower high in the opposite direction. So this is a market structure shift, and it indicates a potential reversal of the trend. And then we have the ranging market, which is simply an accumulation phase, a build-up of orders, consolidation. The market is undecisive of where to go, and trust me, you don't want to be in the market when the market is ranging. So you want to trade with the trend to either be in a uptrend, in a downtrend, or in a downtrend. So we also have the external structures and the internal structure. You can see the external structure here, right? The market makes an higher high, then comes to make a lower low, but on the lower time frame, you see several internal structures before it gets to the demand level, which it needs to push to make a break of structure, right? This, you can call it an external break of structure. I'm coming. Let me relabel this an external break of structure. External break of structure, right? So that is that on market structure. Just for beginners. You're trying to know how to view the market. You're trying to read the market in a certain way. So let me quickly show us on the chart. So we'll not just treat just lines, at least have an idea of what we've been talking about. So this is the 4-hour time frame. As you can see, I marked this out. This is a break of structure. The market made a lower low, then a higher low, then broke the previous higher high to make another higher high, thereby making a break of structure. Now, how do you know a valid break of structure? The market has to close with a body, right? If the body above the previous higher high, right? It has to close with a body. When it weaks it, you have to wait until it closes with a body before you can know it's a valid break of structure. And then the market also came down to make what? An higher low right here, and then broke structure again to make an higher high, then on and on and on. Then the market did what? Market changed character. This is an higher high, right? Then the market broke this higher low right here. Higher low right here. If you switch to the 1-hour time frame, it will be clearer. But even on the 4 hours time frame, if you didn't count this, you can simply count this as your market structure shift. Market broke this, then this is what? Your MSS, your market structure shift. Then you can continue. The market made a pullback, right? Then made a break of structure. So the trend has changed. The trend change has been confirmed. Then the price continued that way, pullback, break of structure, pullback, break of structure, as you can see. So I hope this video has been helpful. Yeah, this is the higher time frame. If we switch to the lower time frame, you see lower time frames like the 5 minutes, the 3 minutes, thereabout. You see before the market gets, let's quickly switch to the 5 minutes time frame. You see before the market gets to this break of structure I marked here, there were lots of behaviors that the market I think my network is not so strong, So as you can see, there was a break of structure here, there was another break of structure right here before it gets to. So this is simply what you can call the internal structures, right? This break of structure and this break of structure, they are simply internal structures. Then the market came to our demand zone and pushed all the way to this external break of structures, right? At highs and lows, there are usually liquidities that pulls the market towards themselves. We'll talk about that in other classes. I hope this video has been helpful. Don't forget to click the subscribe button, notify your friends of this channel. Yeah, I'll see you again.